folks, it is the weekend, and being on the weekend, I thought let's get into some controversy today in this video, okay? Yeah, very controversial video I just came across. Meet the guy who's going all in, 102% into Palantir. And we're going to get into this. Why is this guy going all in on Palantir? We're going to go through his bull thesis, his bear thesis, his thought process here. And then I want to share my perspective on this. This is an extremely controversial subject, not just going all in Palantir, but the fact that you would go all in any stock. And I would love to hear from you guys in the comments section on this, not just in regards to Palantir, but how do you feel about going all in a stock, period? Where is your cutoff line for going all in a stock? Is it at like 10% into one stock? Is it at 5%? Is it at 50%? Love to hear from you guys in the comment section, because this is controversial, very, very controversial subject. And these are sorts of subjects that we got to talk about as an investment community and share different perspectives on something like this. So let's go ahead and get into this. I want to let this gentleman really give his thesis, and then I'm going to have a lot to add kind of after that. So let's kind of
YOLO'd into Palantir. Sachin, I think you're too old to be using that term, but nonetheless, he said you only live once. And this was a term made by Drake, American hip hop rapper. He used it in the song called The Motto. I'm a huge Drake fan, back in 2011.
Admit, first off, if you're a huge Drake fan, Drake is from the Six. He's from Toronto, Canada. What the heck are you talking about, man? Come on, man. Come on.
I'm a cultural phenomenon. And 10 years later, Sachin is now using the term to describe his investment philosophy, thesis, and trajectory in this one company and stock. So please tell us, first of all, are you actually all chips into the stock, and why you chose to do this?
So I'm 101% in Palantir. 101% because I'm using 1% margin.
Dude, that's straight up Dave Lee status, man. Dave Lee did some crazy thing like that, like right for Tesla. So hopefully,
your private investments are safe, though, right? You just liquidated all your public positions, right?
I have liquidated all my public positions. I'm in process of liquidating one of my private position. And once that position is liquidated, I'll have to make a call again. Is it all going in Palantir, or should I buy some of the companies I sold? I mean, there are companies I love. If
anybody's confused on the word liquidated, basically he's just saying he's going to sell that, a private, whatever it is, investment he has, and he's considering putting that in Palantir. And if you're already all in that stock plus margin, I'm sure he's probably going to put that money in there as well.
Like Tesla, APCL. I mean, these are the companies I like. So I have to decide what to do. But at this particular moment, my public equity portfolio is 101% Palantir.
That's yours. Please explain. What's the logic behind this? Walk us through this.
Okay, so guys, first what I did is, it can be considered irresponsible. It is a very risky, and I can lose a lot of money in that. Okay, so I understand this part. Okay, the question for me is why I did it. Okay, so a lot of time I hear about, like, I have done diversified investing, I have done index investing, I have done commodities, futures, options. There are some basic questions on investing that always pondered me. Is that at the end of the day, see what we are trying to do. We are trying to grow our capital, and sometimes our conviction is high. And there was one story which always inspired me. And this is a story of two of the greatest investors of our all time. If I get it right, it was like this, that this one great investor was working in his younger years under another great investors. Okay. And he had a conviction on something which was very high. And he is so bullish that he said we should invest 100%. But he was thinking how to tell this to this investor who is great but senior to him, that I want to go 100% in. He musters the courage. He does a lot of analysis. He goes to his boss and he says, like, few bullet points that why he is, and he has all this thesis with him. And he says that, I'm bullish. I want to go 100%. And this senior guy told him that I'm disappointed. If you have this much conviction, you should go 200%. So the question that came to me is, like, why someone at that position is it risky or is it really thoughtful? So I thought that there could be some scenarios where you really find out a situation that the risk reward is completely asymmetric. And my view is that market is so down right now, and the companies that has the ability to generate a lot of cash, no debt, has a far higher upside than downside. So I was trying to work out different models. Okay, all models are wrong. Some are useful. You can draw inference out of it. So my view was following that Palantir is almost.
I just want to push back for a second here. He says the markets are so down. I think it is important to remember, the Russell hit bear market, the NASDAQ hit right around bear market. Those have already climbed out, and S&P 500 actually hasn't even gotten close to bear market. So I do think it's at least something to think about. Like the Dow, the S&P haven't even gotten close to bear market. So the market's down, but we've seen downfalls a lot bigger than one we've gone through recent.
60% discount to the average PS to their peers in public and private markets. Okay. Right now they are generating 1.5 billion. The company valuation is close to 20 billion, roughly. Okay. So pretty much like they are like 13 to 15 PS. Okay. Their operating margins are good.
When he says PS, that means price to sales ratio. That's taking the market cap, dividing out by whatever revenue the company's doing right now. So if you've got $1 billion of revenue as a company and you got a $10 billion market cap, then you're at a 10 price to sales ratio.
They're raking a lot of cash.
Palantir's been trading anywhere from 13 to 14 right now, and on a forward basis, they're probably at under 10.
Their commercial growth is good. Their government revenue can also. So I thought like even if market beat them this much, their revenue is anyway going to grow. So if it is 1.5 billion and I take 3 years down the line, it will still be like 3 billion or 4 billion kind of revenue at some point of time.
Fair.
And even if I apply the same valuation that we have today, okay, it should still be at least $18-20 in that particular case. Okay. So
he's saying it should be $18 to $20 even in that kind of little more, let's call it bearish case.
Scenario, like where it is today. I mean, where it is like $10-11, I see that's pretty much to me a bear case scenario. Of course, anything can go down. My idea is that bottom for Palantir should not be less than, it should be like $4 if everything goes wrong, because that much cash they hold and that much deal values they have secured. And you can also have to assume that they have an IP which they can sell. So, the liquidating value, if you need to liquidate Palantir today, you should still get $8-9, in the worst case scenario. Okay. So I was running.
Even in a worst case scenario, you could get $8 to $9 is his belief there. I've always, as far as Palantir goes, I've always figured out like worst case scenario would be somewhere between 7 and 9, but that would be ultra worst case scenario for that stock.
And I came up with this point that if in a deep decline, so there were like several checks. The checks is like whole market has to go down in that, but because it has to be, cannot be Palantir thing. It has to be a market macro that is driving. So there was a detachment factor. Okay, which was like how much company's fundamental is detached with the share price. So this detachment factor for me was kind of increasing. So I had a marker on that. I had a marker on this in terms of how the company's performance and consistency in terms of go-to-market channel and strategy is actually is coming up. That was another thing. And like on top of a few other things, I also had like this marker of like $10. Because I had this idea like when it is 9.9, I thought everybody will be jumping and saying it is going to $5. And I said like the liquidate value for me is still like $7, $8, $9. So a lot of people would know that thing. So there is a fair chance it might bounce. So it's a calculated bet. When I was looking at my other investments, I wasn't having this kind of like a Goldilocks scenarios for them. Okay, when will happen, how much that will happen. Now, let me present another view. So I thought this is the case that my downside can go as much as $6-7. Okay, but it's still pretty safe because eventually it will bounce. My upside, even in the current macro and current sentiment, can now take stock to $16-18. Veronica, let's take a case that company does $4 billion and market says, it's a good company, looking good, may not be a snowflake, but let's give a PS of 30. That is $120 billion market valuation. You can assume some dilution. That is still 4x scenario from here for me. Right. And if companies does really good and they get all guns blazing, as I expect them to do, it could go more. So I said, okay, they are 20. They could be anywhere between 30 to 150 billion. Okay, they should not go below 10 to 12 billion. So it was an asymmetric trade. So at the end of the day, it's a market decline. So I thought, okay, how many other companies I'm seeing that kind of scenarios at this particular time? So this time I thought in terms of opportunity cost, and it seems pretty naive to do that kind of investment. Okay, but see, guys, investments, every strategy has its boundary conditions. Like I say, if you understand what risk you are taking and you can digest it, stomach it, and execute it ruthlessly. I mean, people do diversification. I mean, Bill Gates did diversification when he was the richest man. He went with Warren Buffett, where he's now. He's still rich, but definitely his wealth hasn't appreciated that well. So everything was he went into wealth preservation mode. I'm not in wealth preservation mode. I'm in wealth grow mode. Okay, that is a mode. You have to accept as an investor what you are. So I can tell you, like, if what I have done, I mean, with my 20% of net wealth in this company, if a stock goes to $2, I wouldn't shed a sweat or tear on that.
You wouldn't be homeless, basically.
Yeah, I mean, I know because what I need to do in that particular case. I mean, so it's a risk. I mean, no one knows what happens stock market, and everybody has a very different kind of appetite. I have seen the company on ground. I have seen. So this is the thing. If you believe in something and you believe in your conviction, your analysis, and what do you want? I mean, I want to do like, I want to be on a bed when I'm 70, 80 and thinking I would have done it. No, man, I'm not a kind of person who keeps regret. I have changed several careers. I have changed several degrees. I'm practically semi-retired at 43. I wouldn't have done it if I didn't have the risk appetite. So I need to believe. I believe in walk the talk. If I say it's good, I present everybody analysis that this is how I think about it, and this is how my conviction is. I mean, it's all useless if I cannot act on it. But
all right, let's get some thoughts on.
All right, so I want to make 3 points here. Then we'll finish off this, and then I got another point I want to make essentially here. Okay, so first off, it's not like this guy's just like woke up and he's like, I'm gonna throw all my money in Palantir stock. It's a thought through decision, right? Now, do I think he's gonna make money in this over the next, let's just say 5 years? Do I think this is a moneymaker over the next 5 years? Yes, I think he's gonna make a lot of money over the next 5 years. I think I would call it a very high probability he doubles up to quadruples up his money over the next 5 years. Possibility even does better than that, but I think a double up to 4x is pretty realistic over the next 5 years, essentially, in my personal opinion. Now, I want to make a point here. So, this is something that I think is debated in the stock market. You guys probably can't really see this too well, but it's in the financial markets in general. It's a thought process of like, you got this guy, right? Which this video is about to make a turn here, by the way. He's going 100%. He's putting all his money in one stock, right? Now, you got this next guy that says, that's crazy. You're a lunatic, man. The most you should have in one stock is like 10% of your money. To have 100% of your money in one stock, in your stock market account, that's just ludicrous. Have 10%, right? The next guy says, dude, are you crazy? Like, you don't put all 10% of your money in one stock. You shouldn't even be buying individual stocks. He says you should be in QQQ. Like, just follow the NASDAQ around. The NASDAQ's done amazing over the past decade plus. You're diversified. You're in a ton of different stocks. It's the 100, NASDAQ stocks. Just go QQQ. This next guy says, no, are you crazy? The NASDAQ's more risky stocks. That's only 100 stocks. What you need to be in is the S&P 500. Be in an index fund that tracks S&P 500. You're taking less risk in that, right? Next guy says, dude, are you insane? You're playing around with the stock market. Valuations can move all around based upon, what the Fed's doing and things like that. Plus, what happens if all company earnings go down over the next couple of years? What are you going to do then, right? He says, market's way too volatile. Put your money in the bank. Put your money in savings accounts, CD accounts, things like that, right? Next guy says, dude, are you crazy? You're putting your money in the bank? Oh, you think your money's safe at the bank? No, what you need to do is keep your money all in a safe at your house, because that's where it's actually safe. Because guess what? You go into the bank and all of a sudden they say, oh, we don't have your money, right? Next guy says, are you guys lunatics? You're keeping your money in cash? What? They're devaluing your cash all the time. They're printing like crazy. What you need to be in is the original money. That is gold. That's been around for thousands of years and has always increased over the past thousands of years. That's where your money should be. And so that's where you get this kind of, risk appetite along the way where it's like, where is the cutoff? And then the hard thing with that is it's really dependent upon you personally and what your financial situation is. You can't just say, everybody should do this one thing, because not everybody's like that's not the way everybody wants to live. It's like it's the same as saying everybody has to eat a certain way. Everybody has to talk a certain way. Everybody has to approach things a certain way. You can't do that. Like, people want to be their own people, and people want to live their own life. This guy wants to put 100% of his money in Palantir, and he's thought about it for probably months and months, if not a year, and that's a move he wants to make. On the flip side, somebody says, dude, you shouldn't even be in stocks. Be in cash. Be in gold. Like, that's the thing. You can't just say everybody's got to do this one thing, because everybody has a different approach. My approach is going to be different than most people. Somebody that's in an S&P 500 index fund is going to be very different than a person that's all in cash. And so you can't just say everybody's got to be this way. We're all humans. We want to be different. Some people are going to think alike, and others are going to be like, no, that's not quite the way. Okay. So I think that's just an important factor to kind of make. I would love to hear your guys' 2 cents as always down there.
The panel. Let's do Cameron first, then Chris. Cam, what are your thoughts on that? Raw thoughts. How do you feel about the move?
I love it. Whenever I see him tweet that,
he said he loves it.
Probably not the smartest thing just to go off somebody's tweet, but it's like, I don't know. Like, he definitely convicted me. It's like I went and bought another 1,000 shares whenever he tweeted that. Just and like the charts that I've shared with you, I went and looked at that, and I was like,
all right, I'll push back against that. You should never let somebody else's, opinion dictate if you're going to buy or sell a stock, because that's just usually a bad decision. You got to believe in it yourself. Just because he says something positive, or a person on CNBC or me or whoever, you got to have your own convictions, your own beliefs, and never buy or sell a stock based upon somebody else's opinion. That's usually no bueno. No bueno.
This is bounced out of this really, really crappy down channel that we've been in, and because we've been in that since freaking beginning of November. Like, soon as earnings hit, we've just been in a falling knife pattern. It's just nonstop. We've tried to break out a few times, it just hasn't happened. But I love it. I mean, the only way I see this Palantir failing, is if the United States fails, which, just based on what I've seen lately with us sharing information with the Chinese for the past 3 months, may not be that far-fetched right now. But I'm holding out hope that that's not a reality.
And guys, just to be clear to everyone, like, my public equity is 101% Palantir, but I have private investments also. I have investments in companies like SpaceX, Klarna, Peptilogics, Atai, Solaris Bank, Mastios, Gully Network. So, I'm not 100% YOLOing with all of my wealth. I'm 100%
that's important.
Investing.
What would you say your percentage net worth is in Palantir? Do you have any idea?
25%.
See, that's very important. So 25% of his actual net worth is in Palantir stock. That's an important factor to know there, because the way I always view it is like, how much of your net worth is in something, right? Like, I didn't know, like, maybe 100% of his net worth is tied up in stocks, and you just put 100% of that 100% in this one stock, right? That's an important factor to know, that only technically 25% of his money's in this actual one stock.
So I'm probably somewhere around 80, which probably not the best idea in the world.
Oh, so he's 80% of his net worth is in Palantir stock. So see, this guy's actually the real risk taker. In this video, it made it seem like this guy was the real risk taker, but actually it's him. He's actually the real risk taker, because he has 80% of his net worth. 80% of his net worth in Palantir stock, where this guy only actually has 25%. So actually a much smaller number there. That's interesting.
And kind of I don't know if that's what got Karp's attention when I emailed him, but I said that to him in my email. And it's like, probably not the smartest thing in the world to put like almost my entire network into your company. But I believe in what you're doing, and everything that y'all do just really resonates with me, which is really hard to do.
Yeah, we'll get your thoughts on. I want you to tell the email story. Again, Chris, what are your thoughts on Sachin?
I think it's crazy. I think it's super irresponsible. I think it's the worst thing a person could possibly do. That's straight gambling. But guess what?
Wow, that man, he's not afraid to say how he feels. Holy smokers, that ain't no jokus. Woo!
Everyone has to understand their own risk appetite, and everyone has to do things that are based on what their logic is. Now, I've seen very few times where people have gotten this level of conviction, and fortunately, every time that's worked out. Like, I'll give you an example of someone that we all know. I don't know if you guys know Jeremy Lefebvre, whatever.
No, don't talk about me.
He was at one
Financial
point.
Don't talk about me.
Shout out.
Financial-
He put me on his channel. Got me
No.
like 800 subs that day. I love that
No,
guy.
don't talk
Yeah, go
about
ahead.
me.
Jeremy was working at a gas station. I think he was
Hey,
a-
I know I worked at a gas station, okay? It's been a while. It's been 8 years, man. I think I'll always be known as the gas station guy who buys stocks. But anyways, I got one last point I want to make, okay? So obviously we talked about kind of the risk appetite and how every single person is different, right? You know, last point I want to make, you know, guys like that, my gosh, if I think about the type of shareholder base I want in a stock, if I'm involved in that stock, it's those type of people, right? That are putting their entire stock accounts into this one stock because they have that ultra belief in this company. And those people aren't going to sell. That's the thing. Like in a lot of stocks, what you get a lot of weak hands in stocks, right? Where people will buy in a little bit here and there, whether it's funds, whether it's institutional money, whether it's you know, individual investors, they'll buy a little bit of shares. But as soon as things get a little shaky, the stock price starts dropping, you know, they miss numbers, something like that. People are real fast out of those stocks. I can tell you, guys like that guy, he, you know, and the other guy as well, the Cameron guy, those guys aren't getting out of this stock. Like if they miss some quarterly metric next quarter, they're not selling out of that stock. And as it goes up over time, guess what? They're also not going to sell that stock anytime soon, because the way, you know, folks like that think that have gone so heavy into a stock is they're in that for the massive upside over the coming years. So if Palantir goes from $10 to $20, they're not cashing out at 20 because they believe it's going to 60, 80, $100+ over the coming years. And so you get this kind of beautiful shareholder base, and that's something that Tesla really built out, right? And the Tesla community really built out a strong shareholder base where people weren't just excited to make that first like 10, 20, 30% on the stock. And as it went up hundreds of percent, thousands of percent, what ended up happening was you just found more and more folks that came into that stock who really believed in it for a long term. And that frustrates some people because some people look at the stock and they're like, it shouldn't be trading at this price to sales ratio and this PE ratio and things like that. It should be trading at this. And it's like, if you just have a lot of shareholders who always consistently want to buy the stock and don't care about selling it because they believe where the company's going over the next 5, 10, 15, 20 years, then that's what you get. And you're always going to have a stock that trades at a huge premium versus where the market's at or where their competitors are at, okay? So, you know, that's the type of shareholders I would like, you know, in stocks that I'm invested in. So hope you guys enjoyed this video. As always, let me know what your opinion. Like I said, very controversial subject, but these are subjects we got to talk about sometimes in the market because they're very, very important subjects. Make sure to subscribe to the channel if you're not already and get some free stocks from Moomoo while they're still giving those out. They got a welcome bonus, which you can get up to 5 free stocks, plus a free TTCF share with a $100 deposit. Much love and have a great day.